Joining us today is Mark Garland, President and CEO of 4R Systems. 4R is a leading provider of cloud-based prescriptive analytics solutions, leveraging the latest machine learning and AI strategies that help businesses optimize their supply chain and merchandising decisions. Their innovative SaaS solutions are dedicated to helping businesses improve strategic decisions across the key functional areas, such as demand prediction, fulfillment replenishment, assortment strategies, product allocation, and pricing strategies. Mark joined 4R Systems in 2012 and brings over 18 years of experience in the supply chain industry. His career is focused on supply chain technologies, particularly within the retail industry. He's joined 4R to drive strategic sales, client delivery, and marketing industry analyst liaison within the marketplace. In 2020, Mark was promoted from SVP of Sales, Marketing, and Solutions to President and CEO. Prior to joining 4R Systems, Mark worked for companies such as Capgemini US, Accenture, British Airways, and Manugistics. Quite a resume. Welcome, Mark. Thank you for joining us.
Thank you.
Also with us today is Adheer Bahulkar, a partner in consumer and retail practice with global strategy and management consulting firm Kearney. Based in their Washington, D.C. office, he is an advisor to global brands and retailers on operations, strategy, and design to generate profitable growth. Adheer brings over 20 years of experience in general merchandise, soft lines, and mass and grocery retail across offline and online store operations, multi-channel merchandising, planning, as well as global sourcing and a supply chain. Of interest to him is the long horizon view of retail, implications and opportunities for the role data can play in operations design, and what brands will need to both influence consumer demand as well as enable most efficient ways to deliver on the consumer promise. Welcome, Mark and Adheer. And with that, I will hand the presentation over to you. Thanks, guys.
Excellent. Thank you, Alison. Appreciate the introductions. And Adheer, welcome. Looking forward to spending some time with you. So we're going to talk a little bit about sort of cracking the code of inventory. And really, at the end of the day, what are we dealing with? We're dealing with uncertainty. Uncertainty in terms of trying to predict consumer demand, trying to predict all of the vendor sort of flow of inventory through the supply chain. But really, to sort of simplify the sort of the retail decisions, particularly within supply chain and merchandising from an inventory perspective, there's three core decisions: what to buy, how much to buy, and then finally where to put it and when. And so, why are these decisions difficult? Well, what to buy primarily is, what should be in the assortment? Do I localize the assortment? Is this SKU productive? Is this product in the right location within the assortment itself? How much to buy then gets into balancing that. Am I overbuying, from an excessive inventory cost perspective and markdowns? Am I underbuying? Therefore, I'm getting into more missed sales and stock outs. But the real core of what we're going to talk about today is really that sort of that inventory optimization. Where should I put that inventory and when? And how should I flow that through? And I'm going to talk a little bit as we go through this, just as a concept around balancing two core concepts around lost sales and inventory carrying cost, and explain how truly we optimize the sort of inventory across the business. But what I'd like to do is just ask Adheer, how do you quantify, the cost of the business of getting some of these decisions wrong?
Mark, the cost of this uncertainty that you described to the retailer community is extremely high. We have seen consistent data across a wide range of retailers that for every occurrence of an out-of-stock event, there is at least a 33% chance that it results in a lost sale. Now, this really hurts because imagine here's a customer who kind of went through the entire discovery process, made up his mind or her mind, and chose your product, your store, above everything else out there. But in that crucial moment, you simply aren't able to convert, right? So you've done all the difficult part and you miss out and you still have a lost sale. The interesting thing is, while the impact of out of stock is perhaps easily understood, overstocks can be just as harmful to your business. Overstocks lock up valuable open to buy cash, and that prevents you from putting on the shelf something else that would actually have sold better and faster. And our research has shown that out of stocks and overstocks are costing US retailers upwards of $250 billion annually. So the cost is extremely high for retailers.
Yeah, no, it's very, very, very interesting. So I guess the question is, how do we deal with that uncertainty? How do we deal with that buying or the overbuying, and sort of making sure that we don't have those stranded, that's what we call stranded inventory. So obviously, in an ideal world, we've got the perfect forecast. It's always right, 100% all of the time. Therefore, we would just buy and allocate to the stores exactly as we would, because we have this 100% perfect forecast. But let's be realistic, we don't. We always know that the forecast is always wrong. It's the question is by how much? And then as you sort of extrapolate that across, vendors, DCs, fulfillment centers, stores, etc., you're extrapolating those inaccuracies across the business. So we look at this from sort of every decision represents, in essence, a form of hedging against demand uncertainty. How much are we wrong, and therefore what's that risk reward? And we'll come to that in a little bit as we go through this. So there's three ways to solve this. Initially, number one is, as an organization, you want to forecast more accurately, reduce that uncertainty. Second is always that option to deploy more inventory, but we know it's a scarce commodity, particularly at the moment. We want to be very, very strategic where we place that inventory, and also you could increase those safety stocks. But again, all are very, kind of one plays against the other. Third element is, look at your supply chain, get more agile, try and get shorter lead times, lower the case size, increase the review frequencies, etc. But really, those are all great concepts. But what it boils down to is we want to balance these two areas. The primary goal is to meet demand profitably. We just want to make sure we've got the right amount of the inventory in the right location at the right time when that transaction happens, or pre-position on the anticipation that it is going to happen. And there's this kind of trade-off between two core areas in terms of lost sales, but also injecting more inventory into the supply chain. So on the image there of too little inventory, we've all seen this over the last 12 months, particularly at the early stages of 2020, the empty shelves, the various product categories that were just unable to supply, etc. But as we're coming through into 2021 now, we're starting to see that come back. But again, it's trying to balance that too little inventory. Therefore, we've got lost sales, but also we don't want to be in a situation where we've got too much inventory. Therefore, we've got the sort of the high carrying cost. And so, Adheer, I'm interested to get your thoughts on these two core concepts, and sort of they're important to look at, but why are they? In your opinion?
Yeah, as a retailer, inventory at the end of the day is an investment you're making, and you have to think about making the best use of every dollar you are investing in your inventory. If I invest a dollar into a slow-moving product at the expense of a fast-moving product, then yes, I'm opening myself up to that 30 to 50% chance that I will forever lose the sale of that fast-moving product. But the damage doesn't end there, right? As you described, kind of the high carrying cost. Overstocks also open up the risks of product aging and damaging on the shelf, and ultimately resulting in waste, right? Mm-hmm. Particularly more important for kind of products with limited shelf life. This kind of commercial waste alone in grocery is estimated to be upwards of $30 billion, right? So you can see how both lost sales as well as high carrying costs can be very meaningful. So you ask ourselves this question, is this problem worth fixing? And the answer has to be absolutely yes, right? And the answer is simple, though. There is finite inventory dollars and there is finite shelf space. By the way, people think e-commerce gives me infinite shelf space, but in practice, that is just not true. Shoppers can't actually see the entire shelf online as they see in the store, right? They see what fits on their screen. If your product is not available, then it simply won't get shown on the screen. So there is uncertainty, and if you are going to take a risk, you always want to bet your dollar on that faster moving product, right? And that's where the idea around how do we use better data, better analytics to help us make those decisions becomes very important.
No, it's interesting, and yeah, the endless aisle in the e-commerce world is an interesting one. But let's get back to sort of how we deal with that uncertainty. So, there are those three other areas: increase, forecast accuracy, looking at your parameters in terms of supply chain agility, and obviously increasing inventory out, putting more inventory out. There is actually a fourth way, and that's a little bit more of what we're going to talk about of this balancing from an inventory investment perspective. If I put that the single item in that location, what's its financial return? And there is, there is a sort of an optimal level of inventory to have in every single location and every single product, and similar in the sort of the digital e-commerce world as well. So using the same forecast and the supply chain and all the same parameters, etc. The trick is making better decisions, aligning your inventory decisions to profitability. And so really what that is balancing, in essence, is your risk and reward. What's the risk of that item not being in that location for that when that transaction happens, but also the reward that you have that item there, therefore you can transact the sale, etc., and you've got a happy customer. So I'm going to talk in very simple terms here as to kind of how this approach works. So if we just go to kind of that, it's kind of a balancing the risk, the reward, the cost of lost sales. So you've got low inventory, which is great. You've got low carrying costs, but at the end of the day, too little inventory leads to stock outs, lost sales, and at the end of the day, unhappy customers. And we all know how much it takes to regain or attract new customers, and you want to retain them. You want to make sure that it's there at that point when that transaction happens, whether it happens digitally or whether it happens physically in the store itself. So, how much inventory is enough? Then if you go to the right side of this, yeah, great, you can push all this inventory out into the marketplace, but then you've got, high inventory, good in stocks, happy customers, but now you've got a situation where you've got excess inventory and excess costs. Plus also at the end of the day, particularly if you're in the allocation world, you've got stranded inventory. Then you've got to take those excessive markdowns, et cetera, in the future. So what are we trying to do? We're trying to balance these two core concepts, the cost of lost sales, but at the same time, making sure that we are focusing on the cost of carrying that inventory. And so when we've developed the approach and the algorithms to balance these two out, and we're talking of doing this computation in essence for every single item in every single location, whether that be your vendor into your DC, or DC out to warehouse, or warehouse to, or direct to store, etc. Every single node in that network is looking at what's the cost of carrying the inventory and what's the cost of not having the inventory in place to make sure that you can actually fulfill. So when you really look at those core metrics, what we found is that overall service levels increase, turns increase, but also your profit in terms of percentage of sales increases as well. Depending on the product category, the type of retailer, we're seeing profit improvements of 2% plus as a percent of profit improvement over, in terms of over sales, etc. So when you look at this from a financial perspective, knowing, this item's profitable, it has a propensity to drive more demand in this particular location, in a replenishment world, great, you can flow the inventory through. If you've only got a finite amount of inventory, then how do I allocate that? Then this is how it ultimately drives in terms of higher profits, higher in stocks, higher turns, and ultimately obviously happier customers that you've retained when they've made that decision to make that purchase. So again, it's a balancing, but the approach is balancing those two core metrics. So what does this do? Optimization is an approach, in essence, to dealing with those uncertain outcomes. As I say, too much uncertainty in the customer demand, for a perfect forecast doesn't exist. We know that. Forecast uncertainty is risk. That forecast accuracy or the forecast error, in essence, is risk. And how do you convert that risk into reward? And managing that is, in essence, it's like an investment fund. You put money into your investment fund, you expect a rate of return. Well, if you do that computation for every item in every location, which is what we do within our organization in terms of our solutions, therefore you can actually monetize the return and ultimately drive your store orders or vendor orders, forecast, etc., all the way through the supply chain and manage those decisions from a profitable perspective. Versus what we call a service level chasing. which is I want to be at X% in stocks, therefore I've got to adjust all these parameters. What we do is we optimize based on a what we call a goal-seeking approach to gives you that optimal inventory output, which could be an order point if it's particularly in a store, or if it's a vendor order bringing into the store, if it's a direct ship order, etc. And managing all of those those risks and rewards, the cost of lost sales or the cost of excess inventory, and balancing those two core concepts out. So what do? We focus on that from a profit perspective, making the most profitable decision, looking at product economics, margin, carrying cost, etc., looking at all the different demand factors, even going down to attributes for a particular product that drives demand, etc., looking at all the different supply chain parameters. And when you mine all of that data on a daily, weekly frequency, as I say, and looking at this in the lens of balancing that out from an inventory carrying cost and the cost of lost sales, it truly drives that overall profit improvement. But the ultimate output is you inject that into your execution system, and leveraging the true machine learning and AI optimization techniques, particularly from an inventory perspective. So if we just sort of conclusion a little bit more here is, and we talked a lot about inventory from a replenishment allocation perspective, but when you apply this across the core functions of retail, in essence, supply chain, clearly replenishment allocation, but when you apply this similar logic in the assortment world in merchandising, is this item profitable? Is this going to have a rate of return? Should I consider, is the demand potential, if I was to put it in this particular location, how do I cluster from a profitability perspective in terms of a financial return? Looking at it also from a markdown optimization perspective. Markdowns, it's a necessary evil, but at the end of the day, it's how do you exit out of that particular assortment, profitably, and sort of. So again, looking at all these different approaches, but again, the two core sort of points here is, number one, it's maximizing your inventory, and secondly, is focusing on this in terms of a profitability perspective. So that's what we do within 4R. That's really our focus around machine learning and AI in these core areas, but really looking at it from a financial inventory perspective. And that is our view of sort of how we crack the inventory code of optimization. So what I'd like to do, Adheer, is just ask you a couple of questions here, because you've had a lot of experience with retail and solutions like 4R. I'd be curious to sort of get your perspective on sort of what you see as the barriers that exist in adopting solutions like 4R, etc. And how would you recommend a retailer considers getting started with these types of technologies and optimization solutions?
Yeah, Mark, you're getting on something very critical, and I'm sure many in our audience will have the same question. The barriers are, from what I've seen over the past couple of decades, largely internal. And unfortunately, a lot of these barriers are perceived, but not actual. And let me give you 2-3 examples. Is the by far the biggest obstacle you always hear is we don't have good data. We don't have the right data. We don't have enough data. So why bother? And I can't emphasize enough that is simply not true. I have yet to see a retailer, doesn't matter which format, which kind of channel, which category, I have yet to see a retailer who doesn't have enough data to start effectively moving the needle. I think it's really knowing what data to look at, knowing that we are applying the right tools and the right methodologies that can really start unlocking this lost sales and lost margin opportunity. So that's one big kind of myth that we don't have data, and I think we really need to reject that. But I think increasingly we hear different barriers now, right? To say, wait a minute, we are omni-channel, so if it's not on the shelf, then she will just buy it online. Well, that's your hope, and it's great that you are omni-channel, but our research is showing that there is still a 30 to 50% chance that it won't happen, right? Just because we have made that available doesn't mean the customer will always choose that. So do we really know for a fact that that's how our customer is behaving? Because again, we might be leaving a lot of revenue on the table that we need to really go after. And the third thing, I will give an example, which we see surfacing in many, many different categories, is we have very high presentation standards. So all of our shelves need to be full, and we don't like empty shelves. What we would really encourage is maybe it is time to become more customer centric, right? Maybe it is time to rethink our presentations, because just because we thought a presentation looks good on the shelf, and in that we ended up putting a lot more inventory on things that are not selling fast enough, doesn't mean we need to perpetuate that, right? So I think kind of even having our presentation standards becoming more customer centric can directly result into recapturing some of the lost sales and recapturing some of the lost margins. So what I would really urge kind of people listening and trying to kind of get focused on this is reject these barriers, because these are simply not true. And I think a little bit of facts, a little bit of data can go a long way in helping clear the path. And that gets to the second part of the question, which is, well, how does one get started, right? Kind of in my view, the biggest way to kind of really amplify this opportunity is the first step is making the problem real, right? Let's really quantify the opportunity in our business with our customers, and really kind of making sure that everybody understands that this problem is worth solving, right? Because once you have an estimate of that lost sales, once you have an estimate of how much margin you are giving up, then it's much easier to get the attention, get the focus, get the resources to work on it. And how do we do that? Well, start with asking your customers. Some of the retailers out there have NPS data. If not, very often when I'm working on a new client, I will just spend time in the stores and ask around customers about their experiences and make my own in-store observations. Are customers ultimately having trouble finding what they're looking for or not? And if they are, then I think that gives you a first instinct about, okay, maybe there's something here. If you are able to just map your on-hand inventory and map it against your sales velocity, very often you will immediately see some glaring discrepancies between the two. And I think that leads you to ask the questions to say, why do I have so much of something that I'm selling so little? And why do I have so little of something I'm selling so much, right? And I think that kind of starts creating some hypothesis around the opportunities and how do I want to go about it. The last thing I will say is, if you have strong hypotheses, don't overanalyze, right? The beauty of being in retail is you can pilot these changes in one store, in one category, in one region, and very quickly test the hypothesis. Double face or triple face your fast moving product and see if that's creating a sales lift. Right away, instantly, you know that there's something worth kind of pursuing. And if it does, you know you are onto something, right? And now with that evidence, with that kind of data points, with that customer view, now you can start thinking about investing in the right tools and embedding the right capabilities in your day-to-day operations, right? So I think in conclusion, what I would say, Mark, is the barriers are real, but I think they are a little bit of fact, a little bit of focus, a little bit of energy can really kind of shatter through them. And I think kind of easing their way into kind of this capability building can very quickly build a business case and allow you to kind of go after the right capabilities to really move the needle in your business.
Yeah, no, very, very interesting, Adheer, and I appreciate your insights there. And it's certainly things that we deal with, in terms of as we're talking to, retailers and prospects, et cetera, is the data. So, well, once we get the data, we're the engineers. We mine it. We have the solutions. We have the optimizations to monetize that output, particularly in these core areas within the supply chain that we're trying to do here. So, first of all, Adheer, thank you for your insights. Appreciate that. And I know we're at the sort of close to the end of timing here. So I'm going to hand back to Alison, who's going to moderate our live Q&A session. Alison, over to you.
Hi there. Thanks, guys. Great insights. I appreciate it. Learned a lot for sure. We have had questions coming in during the presentation. Just a reminder to those listening, you're welcome to submit questions throughout this live Q&A, and to do so, just go to the questions box on your screen. I'm going to try to get to as many as I can, but I see we've had several come in already. So to kick us off, first question here. What benefits, I know you touched on this a bit in your presentation, Mark, but if you could maybe summarize for us, what benefits have retailers typically seen from this approach to inventory optimization?
So there's a couple of areas. Number one is from a monetary kind of ROI perspective, as I say, depending on the product category, the type of retail, et cetera, we can see anything from a replenishment perspective between 2 and 8% of profit improvements based on the percentage of sales. If we're talking potentially getting into assortment decisions, et cetera, that can go up between 8 to 12%, again on the similar metric. So that's really the financial ROI, and part of what we do initially is provide that value proposition. We actually take some of that data, we mine it, we come back to from a prospect perspective, and we actually provide that value proposition. And then as we engage going forward, it's how are we achieving that value, and then continuously demonstrating how much of that value we continue to drive within the business. So that's how we base kind of our approach around the benefits. The second area I would say is there's more of the soft benefits. The beauty of this with it, and I kind of touched a little bit on the goal-seeking approach versus service-level chasing. What we don't necessarily need, some organizations have a large team of people that are users trying to get adjust safety stock and all these different parameters. With a goal-seeking approach to kind of the inventory decision, is we don't necessarily need a large team of people. We've got customers that are several thousand stores, for instance, and they've got 3 individuals that are actually working directly with the 4R solution. So there's other benefits as well, but those I would say are the core ones that I would demonstrate today.
I've got a great question here as we kind of look toward the future. So machine learning and AI approaches to inventory seem to be the leading science in solving these problems for retailers now. What do you see as the next emerging approaches in the future?
I can take that, Allison.
Thank you.
The ultimate goal is really touchless planning. And how do we let the right algorithms, AI, ML, and whatever is next to come, how do we let the right algorithms do their thing without unnecessary and in my opinion, often counterproductive human intervention, right? That's really ultimately the goal, to say, let's really get the right algorithms to do the right thing. But I think there's a little bit of a careful consideration there, because no one big system is ever going to solve your entire problem. And I think if you're waiting for the next ERP or the next whatever to come in and solve it, you'll probably be waiting forever. We are seeing a lot of plug-and-play tools in the future ecosystem that every retailer will have to make part of their strategy. And one has to get comfortable with deploying smart tools wherever they come from that talk to each other to really enable that vision of touchless planning. And I think that's a direction that we are really seeing happening in the industry.
Fascinating, honestly. The science advances so quickly. Okay, here's the $1 million question for you guys. What do you see as the top challenges for retailers as they begin to emerge from the global pandemic and return to, quote unquote, the new normal?
I'll take that as well. And this is a question our clients are increasingly asking us, so it's very timely. I view it in 2 simple ways. One is keep encouraging good customer behaviors and keep discouraging bad internal behaviors. And what do I mean by that? Look, I think the pandemic, and particularly for retail, has shifted a lot of customer behaviors and buying behaviors. The trick is to really say, how do we create stickiness in the good behaviors that the customer has shown, right? And whether it's buying online, and how do we perpetualize them through various subscription models, et cetera. So I think we really want to get focused very quickly on what are the behaviors that customers have demonstrated, and how do we really use them in a positive manner going forward. But the discouraging bad behaviors internally is also very important, right? Because we saw a lot of consumer brands and retailers during the pandemic simplify their portfolio, right? Focus on product availability, because that was so crucial to the customers. And in doing so, they've reduced their assortment, they've reduced their choices to really maximize kind of product availability, which was so critical at the time, we are very much encouraging them to continue that path, right? Don't let kind of the post-pandemic era get us back to business as usual, and again, started focusing on over assortment, over choice, and creating product availability issues, right? So focusing on that. So while the category specific challenges and opportunities will be very unique for each retailer, but I think in the spirit of encouraging kind of the good behaviors and discouraging kind of the business as usual bad behaviors is really how we are kind of asking our clients to think about how to best position themselves for the new normal.
Wonderful. Okay, here's a tough one. Retailers typically have large numbers of physical stores as well as a growing or established e-commerce channel. We're seeing that every day, right? The brick and mortar trying to figure out how to improve their e-commerce solutions. Some of the solutions that you've outlined today, how are these approaches applicable to the pure digital e-commerce retailers out there today?
Yeah, that's an interesting question, and it's not that tough. But at the end of the day,
tough for me to answer, not for you.
Okay, well, you answer it maybe. Maybe you answer it then. I'll be interested to see your response. No. Joking aside, number one is at the end of the day, it goes back to those three core decisions. You know, what to buy, where to buy, in terms of, and then how to flow that through. So from a pure digital e-com perspective, they've still got some of those similar decisions. You just don't have the thousands of stores or the hundreds of stores, or even just your store footprint may just be kind of a digital store footprint, but you've still got those decisions around how much inventory. Have you got multiple DCs that you're fulfilling from a fulfillment center perspective? So all of this is still applicable. It's just when you get into the large big box retail, you're dealing with hundreds to thousands of stores, and just the solution is larger. From a data perspective versus pure digital, which really is a smaller data set, but still absolutely applicable in trying to crack the code on your inventory optimization. What should you position? Should you put that in the assortment? Should you present that to the customer through your digital channel? But these are similar challenges that most retailers that have got multiple channels. You've got your physical and your digital e-commerce channels as well, are facing some of these similar decisions. They have some slightly other complexities because do I fulfill from store? Do I fulfill from DC? Again, all of these are decision points that ultimately are trying to optimize that optimal level of inventory to, at the end of the day, make sure you've got a happy customer when they make that decision that you've got the inventory there to make that transaction happen.
Fantastic. We have many more questions in the queue. Unfortunately, we don't have that much time. I'm going to ask this last question. I believe it's directed to Adheer. But just note, if you did ask a question that we didn't respond to today, Adheer and Mark will receive all of those questions and can hopefully respond to you offline. But last question for you, Adheer. In your experience consulting with many retailers, could you share with the group an example where a retailer has truly adopted inventory optimization and would be a market leader in this area? They also mentioned, appreciate you might not be able to say the client's name, but sharing with us their characteristics would be fine.
Sure. Maybe let me talk in broader category terms, and I will give one specific example because I think it's very inspirational. Look, I think across multiple categories, we see grocery really kind of moving ahead of the pack, and I think one can argue because their margins are already so kind of constrained that they have no choice but to get smart around inventory investments and how do they maximize. General merchandise, drugstores, and soft lines are typically behind. Doesn't mean all of them are behind, but in terms of kind of broad kind of types of retail, we do see grocery a bit ahead, drug and general merchandise a little bit behind, and soft lines, apparel, etc., kind of really waiting. But one great example is really Inditex, and everybody is probably familiar with Zara, and they are so disciplined about their inventory that they don't even worry about empty shelves, right? And in fact, it's interesting that they have used empty shelves as a means to induce panic buying in their customers, right? To say, wait a minute, I see empty shelves in Zara, if I like something, I better buy it because it might not be there tomorrow, right? And I think that's really kind of a great example I can give about a company that is so smart about inventory management. They get so focused on where they invest in inventory dollars, and to a point where they've actually molded consumer behaviors that also kind of suit them and their top line and bottom line. So now that's what I call really smart inventory management.
I may or may not have been one of those Zara customers who bought something because of the panic buying. Mark, Adheer, thank you so much for a great conversation. That's all the time we have for questions, but thank you for joining us today. Much appreciated.
Yeah, thank you. Appreciate it. Thank you.